Welcome to Lance Riggen's Money Mindset, the show where wealth is built with strategy, freedom is created with intention, and legacy starts with the decisions you make today. Hosted by Lance Riggen, this podcast dives into real conversations about investing, entrepreneurship, real estate, mindset, and building a life on your terms. If you're ready to think bigger, move smarter, and take control of your financial future, then you're in the right place. This is Lance Riggen's Money Mindset. Let's get into it. Welcome to another RV Park Blueprint training. I think we're going on at least 2 months, maybe 2.5 months now, that we've been doing nothing but RV parks on this weekly Zoom. So thank you for coming. Invite your friends, anyone you know who wants to learn more about RV parks from start to finish, basically the whole spectrum. We've done a lot of Zooms. We're going to be doing a training tonight. My wife is a training on underwriting training. We're going to do our best to keep it at about an hour. I'll be here for an hour, but that's it. So my wife's been underwriting for us for quite a while. She's very well versed. She knows how to use AI to her advantage, and she'll probably hopefully teach you how to do the right prompting and stuff like that tonight, I think. But I know it's mostly going to be spreadsheet type stuff, but I want to make sure we touch on the how you can have Claude AI help you, not underwrite for you. Okay, it's important that you don't trust the AI to do the whole underwriting, but that you can use it as a tool to get you 80% of the way there, I'd say. So, without further ado, my lovely wife, Jessie Riggen, go ahead, hon.
Okay. Can everybody hear me okay?
Yes.
Perfect. Okay. So I know last week we had promised you underwriting, but when I started to dig into it and put together the syllabus per se, it is going to take a while. So I decided last minute, I didn't put it out there, that we're breaking this up into two different parts because underwriting, it also has analysis. Analysis is more of the gut check on a park, and the underwriting is the math. And they're both very different, but they're both very important aspects of it. So I figured tonight we should absolutely be able to stay within, the 1 hour mark. To go over analysis. Lance and I had gone over this roughly in the beginning when we first rolled out the blueprint, but of course, as we're digging in deeper each week, want to be able to, spend the full hour going through this.
Yeah.
Yeah, Wes is in here.
Wes.
So tonight is the analysis, the first half. Next week, I'll actually be digging into my calculator
Oh,
and
that's right.
analyzing a deal. I'm just going to touch on AI tonight because I'm on Lance's computer and I'm not logged into any of my fun websites. And I don't want to try and remember my passwords because
Yeah, I
that's
think you
all
just
on
give him
my
some
computer.
prompts. Honey, also, do you have the mic in front of you?
Now
Thank
I
you. It
do.
sounded yeah, that sounds so much better. I knew something
Okay.
was wrong. I was like, I paid good money for that setup. It doesn't sound right. There you go. Okay,
I'm
good to
out
go.
of my realm. I'm out of my realm. So my
Way
realm
better.
is
There
about
we go.
4 feet to the left. So, okay. So I'm going to screen share what I put together for you guys tonight. How to analyze a deal. This is based off of how I do my underwriting, and the whole analysis is based off of my buy box. So I'll share this with the recording into the drive like I have been. And if your buy box or your bird dogging for somebody that has a different buy box, just go in and kind of tweak these as needed. So I do it in 3 layers. I had AI throw it together, so don't mind some of the weird stuff. As I said, analysis versus underwriting, they're two very different things. Layer 1 is my market. Does this market make sense? Everybody's buy box has a specific market. You will need to dive into that market a little bit based on the deals that you're looking at, because there's sub-markets within markets. We have Georgia, but Georgia, has Atlanta, which is huge, and then it has some rural areas. So make sure that you're fine-tuning when you're searching, and you can do a lot of this quickly. Layer 2 is the asset, the physical park worth pursuing, and layer 3 is napkin numbers. So that's going to be the outline, and then we'll leave about 15 minutes at the end for any questions that anybody has. I will try not to get too far into the weeds, and I'll also try not to glaze over everything. So analysis today, it's the gut check. Should I spend time on this? It should only take you about 10 minutes. This is pretty quick. If you're trying to, whether bird dog or underwrite for yourself, you're going to have to go through a lot of parks before you find a good one. You don't want to spend the afternoon on one park. It doesn't make sense. This is a numbers game. You're going to have to go through dozens, possibly, more than that to find. So you want to have a system that you can dial in, so you can put a park through the first layer. If it passes, go to 2 and then 3, or if it doesn't pass the first layer, it's out and on to the next one. Don't think about it again. Don't get emotionally attached to some park because it's beautiful or it's, near, I don't know, some fancy destination you like going to. That's great, but this is a business. You need to analyze it as a business and see if it's going to produce the profit. So unless you're going to live on the park and it's going to be the most magical thing ever, keep focused on just sticking to your buy box and continually putting it through the filter to see if it's a good fit. Market,
Mhm.
asset, price
Can I
sensitive.
pause just real quick? Can I pause?
Yeah. Yeah.
The way you're going to analyze is you got to have your buy box dialed in, right?
Yeah.
So easiest way to analyze a park, especially if you're buying, you either have your buyer's buy box if you're a bird dog, or you need to have your buy box dialed in, right? All of our students have a dialed in buy box. So we teach that. It's actually a little more. It's not as easy as you would think. We have to correct most of the people that we're working with a couple of times to get it just right. So I just want to throw that out there. It's going to enable you to analyze the deal really well. So I just want to make sure that we let them know about that.
Yep. No, I love it.
Hmm?
You are allowed to pop in when you need to on my Zoom.
Yes, dear. You look
Uh,
lovely this evening, by the way.
Thank you. Underwriting. Okay. So next week we're going to do the real deep dive, the numbers, what the park is actually worth. I'm going to condense it to an hour and give you the nuggets, but just know that as you start to learn, it should take you, a full hour to 2 hours to do a really deep analysis on a park. And then NOI, normalization, cap rates, cash flows, offer price structure. We actually may do the week after next as, like structures, drafting an offer. Next week is just going to be underwriting so that you are prepared to do an offer and a structure. So just wanted to clarify on that. Filler. Okay, so layer 1, the market thesis. This is the most important thing, right? Location, location, location. That has been the real estate slogan for since as long as slogans have been around, probably. So you can't change the location of the park. Our buy box is 100,000 population within 30 miles of a destination or a tourism draw. We need the park to make money. We need people to make money. Therefore, we need either infrastructure projects or a tourism draw, or we need to be near large growing populations. Most rural parks can be a little bit tougher. So that is our personal buy box, and it's a pretty decent rule of thumb. I've seen a lot of people's buy boxes that are pretty similar to that. So that seems to be kind of a baseline for a lot of people looking for a park because they too want their parks to produce income.
Well, the
Growth
other
trend. Oh,
demographic, real quick, can I jump
mhm,
in? The other demographic is going to be workforce housing. That's the big play right now.
mhm.
So,
Yep.
go ahead.
Yeah. Growth trend. This is important too. You want to make sure that the area is growing. There are some places, there's actually a park, San Angelo, in Texas, San Angelo, Texas, and it has close to 100,000 people, but the market's currently in decline by about 0.4%. We like to see a positive growth of 7%. It doesn't completely mean that the market is a bust. It's just something to be aware of. 100,000 people is still a really strong market, but you do want to check that. 0.7 is the industry standard for growth. Anything above that is wonderful. When we first moved here to Tyler, Texas, they had, oh, what was it? It was like a 3 or 4% growth rate. Now we
Yeah,
have a quarter million
3%.
people. We have a quarter million people. We're not a big hub like the DFW Metro or Houston, which is going to have a smaller growth rate because there's, 4 million people in Houston. But you're definitely going to want to, try and target markets that are growing and on the up and up. So like Lance said, the next one down is demand drivers. Is there workforce, oil, military, tech, tourism, infrastructure? You can check online. There are a lot of websites, news articles, and government that are showing where all of the oil pipelines are going on here in the South. There's natural gas lines too. Louisiana has a big natural gas pipeline that's been going in. You're going to want to check, are there any hotels? Is there any big project going on? Lake Texoma, over near Pottsboro. So Lake Texoma is the lake between Texas and Oklahoma, fancy name. They're putting in a Margaritaville. Not Beaumont, Galveston's also putting in a Margaritaville, like a $700 million project. So I don't really like Galveston because of the hurricanes, but there is a lot of data centers going in. There's a lot of workforce housing. Windmill, solar, just find something, that's within driving distance. That's going to help solidify your income stream. Crime rate's the next one. Crime rate is really important. Some of these parks that seem to have good numbers, they are in really yucky areas and they seem to have good numbers because they're just renting to anybody. And people are getting their cars broken into. You can go to whatever website you want. I think crimedata.com is one of the ones that I use. And you can see, is it in a green zone, yellow, red, and it's self-explanatory. Anything in a red zone is probably a war zone. It's not going to be the best park. Even if you clean up that park somehow, you're still going to be in the red zone. So try and stay out of those areas. You're never going to increase the equity in the park like you want to. It's just going to be kind of a dog park. So FEMA flood zone. Flood zone is really important. It's important for a couple reasons. A, you do not want your park being washed away. That's probably the most important. The second most important thing when checking for a flood zone is your insurance is going to skyrocket. And a lot of these parks that I've analyzed have $20,000 to $25,000 a year insurance, and that's without being in a flood zone. So it's going to go up from there. That's really going to eat into the bottom NOI. So if you're comfortable with it, I would never recommend it. I wouldn't. There's some, parks that are along a river that just naturally would be in a flood zone because it's on a river, but they've pulled their buildings back far enough that they have, I don't know if they all have elevation certificates, but they've put themselves elevated enough that they feel it's safe. That's a personal choice, but I would definitely try and stay away from those because your insurance is going to see it right away and they're not going to care if it's in 100-year flood zone. You might end up being that 1 year that it happens. State laws, landlord friendly state. This is also an easy find. Google, is this state landlord friendly or is it tenant friendly? For transient parks, it's not going to be as important. They're typically staying for 3 months. They're not on a lease. They're just paying monthly, so it's easier to remove them. But if you're looking at RV parks that have long-term tenants, especially a larger majority of them, you want to know what you're going to be up against if you have to evict them. Unfortunately, life happens. And there are times where tenants can't pay rent or don't pay rent, and you need to get them out of there as soon as possible. And some of these states can, take an incredibly long time. So that's the first layer. Once again, it's subjective, right? It's based on each personal buy box, but you want to run it through these and make sure that each one is checking. If they don't, or if two of them don't check, move on. It's not getting past this layer. By the time we get to layer 3, it's going to have you're going to be narrowing down every park you're looking at. You can have some elasticity with your boundaries. Just know where your comfort level is for risk. Maybe you're okay with one of these being, on the park, but maybe you're like, if there's 2 of these boxes that are checked, or I'm not saying it correctly, but be okay with passing on a park because you're going to be able to find another one. Don't just try and make them fit. Does that make sense so far?
Mm-hmm.
Okay. Layer 1 at the bottom. Stop. Don't look at the asset. Do not run numbers. Move on. I got all these little
Yeah,
reminders.
you can't force the numbers. Don't get emotionally attached. That's one of the big no-nos. That's a big rule when you're an investor. We had to learn it early on when we were doing fix and flips over 10 years ago. My wife would get emotionally attached to some of these properties because they had whatever for whatever reason, and we would just stop looking and just focus on the one property. Do not do that. That's a big mistake. Keep looking, keep searching. Doesn't even if you get one under contract, keep moving. It's really
Mhm.
important to
Yep.
just load the pipeline.
Yep. I love that. Absolutely. Because even getting through, the negotiations and the contract, you could potentially fall out of contract. Okay, so you've gotten your deal through layer one, everything looks good. Now we're on to layer two, asset viability. Is this a value add opportunity or a money pit? With parks, that's a big one, especially with the infrastructure, especially with stuff you can't see. So infrastructure is the first one: roads, electric, water, sewer. Functional is fine, gut job is not. Some of these parks have been neglected. Um, slumlords, they're not just in single family, they're in parks too. You don't want to have to go in and completely rip up the park because the septic is failing or because there's some weird owner DIY stuff going on.
Mm,
Some of that might come during your due diligence period, but you can ask questions to the agent. How often do they? And I am getting a little ahead of myself, but some of that can be uh, in the listing. And you can just make a quick call to the agent. There's no reason you have to completely go through this without calling the agent. It might be something where, you realize that the park is 40 years old instead of 5. And you say, hey, I just want to know, has there been any infrastructure upgrades, any CapEx that's been pushed off? Water and sewer. City sewer is definitely better. It's a septic that is not there. You don't have to worry about it. Well and septic is more common. It is going to be more due diligence. You're going to have to get it inspected prior to close. The well, depending on the area, you may have to do water testing. So I haven't seen as many parks with a well. We have well and septic at our West Texas park. We haven't had really any problems with the well besides the pump, but the septics, it's like a 50-year-old park, and we had to do a lot on that. And we even had the septics inspected. We just did not know where all of them were. So, occupancy. What is it now? Can you realistically get to 70% stabilized? I've heard brokers and agents say up to 80% is stabilized. I prefer to run my numbers on 70. I think it's just a more aggressive number, and I like to just run worst case scenarios on my parks, and expect it to cost as much as it can, so that when it does cost less, then I'm making more money. If you do the reverse, you're going to be in a world of hurt. So 70 to 80% is normal, but I err on the side of 70%. Value add, below market rents, utility bill back not in place, expansion. So this is a big one. Below market rents is a beautiful thing to find. It does change the NOI on the purchase side, but you know that you can add value once you get in there. If they've been consistently, raising rents year after year, that's okay too. It just gives you a much smaller margin once you purchase. And a lot of people are looking for value add parks. They want to see that they can raise the rents. They want to see that they can do utility bill back. You may see that RUBS, the word RUBS, RUBS, has been implemented on a listing. That means they're already billing back the utilities, which is great for them, but now you're paying that price because that's pure income. Whereas if they're paying $70,000 a year for electric, that's a value add that you can implement, and you can then capture, what that profit is instead of paying for it on the front end with the cap rate. Um, Expansion on the land. This is something large, a big one for Lance and I that we're looking for. We want to buy parks that have extra land for expansion. Some of these parks, if they already are at 60 or 70% occupancy, that's great. The park's performing, but where do I make my money? Where's the meat on the bone for me? Where can I increase value in this park? I don't want it to just be maybe I can get it from 70% to 80% stabilized. That's not going to be enough profit for us, especially with the new incoming loan or new seller carry terms. So it's nice to have a park with at least a couple of acres. Even with 1 acre, you could potentially put, 20 new sites on that. So that is huge. That's a huge revenue catalyst. You could also put a dog park. You could put laundry if it doesn't have it, a little building. So you can do a lot with extra land. If it's a small park, then you're kind of stuck. Once again, buying value add parks. So finding areas where you can increase the value of the park, because whether you're holding it long term or you plan on exiting in 5 years, you want to be able to push that equity, that value up in the park. And it's going to be really difficult if you're on a lot that is fully utilized. Management is the next one. Can you hire somebody? Is it already in the P&L? Sometimes Crexi will have a due diligence file. It's really convenient when they have that. Does the P&L have a management fee on there? Or are they saying this park makes $200,000 a year, but they're running it themselves? They're doing all the lawn mowing. They're doing all the management. So unless that's a job you want, unless you want to move to that park yourself and mow the yard and take care of the books, the NOI is not correct. You need to account for that. So make sure that you're looking for that. That's
big.
important.
That's
Yeah,
that's
that's a big
big.
one.
Yeah. Oh, that's huge. Yeah, because people tend to glaze over that kind of thing, I think, or
Mhm.
don't account properly for the jobs being done. It's
Mhm.
always better to over calculate, I think, on those jobs.
Yeah. And I've had pretty good luck talking to agents, but sometimes they just glaze over it. They're like, yeah, it's owner operated. Like, well, I'm not moving to that park in
Yeah.
Oklahoma. So you need to make the numbers work for you, right? I mean, you're not manipulating them, you're adjusting them to work for you, but that could be, 50, 60,000 right off the top that now this park is not producing because you're paying somebody to run it for you. So that's a big one. And then the condition of the park. This is the last one in layer 2. You can run these through however you want to, but this is a pretty good layer 2. Deferred maintenance is okay if the price reflects it. If it's a full rebuild pass. There are some parks out there that have just been neglected for a very long time. It is not always apparent when you're looking at the photos. It can be. Some of these parks are dog parks. They are nasty looking and really just anytime somebody uses the word cash cow, it's probably it's probably a cash cow for them because they're not putting any money back into the park. And they don't realize that they're telling you that. Ask me how I know. But you do want to see some maintenance in there, or you want to see a lower price. I don't want a lower price park. I'd rather have a park where somebody's putting the money back into it and I'm paying a little bit more for it because I don't want the headache of having to do all of that construction and repair as soon as I buy the park. Absolutely not. Maybe for somebody else, but not for me. Once again, layer 2. You go through these and you're getting some red flags right out the gate, throw it in the trash, go to the next park. Nothing wrong with that. There's plenty of parks out there.
17,000 to be exact. That's what Pace says anyway. 17,000 RV parks
Oh,
in
yeah.
the
Okay.
United States. Right? Yeah.
Layer 3. Like I said, we're kind of breezing through this. This should only take another 10 or 15 minutes to get through, but that's why I wanted to do the underwriting on a separate one. I want to make sure that there's room for questions at the end of this. So layer 3. So you've gotten your park through the first 2 layers and you're feeling really good about yourself. Does the asking price even make sense before you go deeper? I was doing a park yesterday that has a $4 million asking price. Running my numbers, it should probably be closer to 2.7. That is almost 30%. I feel it's
E.
overpriced. Yeah, it's yucky. So cap rates, quick reference, sub 7, pass overpaid. I don't even know how RV parks get below 7, but whatever. People are sticking numbers on it right now. 7 stretch destination only. Our buy box is 8 to 10%. I'm running my own numbers, so when I'm doing it, I don't really look at their cap rate because my numbers are going to say something completely different. But it is at least loose. It gives you kind of a quick glance at what the park could potentially be doing. Probably not, but it should be somewhat close. Anything 11% or up, I've seen parks 14, 15%. They need a lot of work. You're going to want to try and wholesale them. unless you want to live on the park and completely do a gut job. So anything that has a really high cap rate, it's probably going to fall into that category. The cap rate is essentially what cash on cash return you would get if you bought that park flat out cash. So if the park is making $100,000 a year and they're selling it for $1 million, that's a cap rate. If you paid $1 million for it and the NOI that you're getting is 100,000, that's 10%. So that's a quick breakdown of what a cap rate is. Once again, we know these parks are probably not priced correctly. We know that there are probably hidden expenses in there. You can look at the P&Ls. We will go over that next week in details. So, like I said, that the cap rates are, I don't pay too much attention to them. This is the napkin math. This is the only take you 10 minutes, right? That's why we breeze through this in 20, 30 minutes so far. You should be able to look at a park. I go straight to Google Earth. I want to see what it looks like. I don't want to see the agent photos. Most of them are catfishing anyways. So go straight to Google Earth. If it's rural, you may not be able to get like a 2026 view. If you guys haven't been to Google Earth, googleearth.com, and just punch in the address and it's going to drop you down on an aerial view on top of the park, which I love because you get the bird's eye view. You get to see if there's trash or extra cars. You get to see, roughly how big the lot is. You get to zoom out and see how close it is to a large city. You can drop the little person. If you've never been on Google Earth, down at the bottom right-hand corner, there's a little stick figure man. You can pick him up with your mouse and you can drop him down on the road. It'll highlight blue if a Google car has driven on that road and has, the Google view. And you can see what the park looks like when you drive up to it. For me, that's really important. Lance and I are avid campers. If we pull up somewhere, not that I ever would not research before I got there, but if I pull up to a park, I guarantee you I will sleep at a Walmart parking lot in my trailer before I go into some of those parks. You want to know what this park looks like in real time, not the agent photos. It takes 2 minutes to do that. You can look around it and see, how did the neighbors look? What does the road condition look like? Is it really rural and a crappy road? These people's campers are going to be bouncing all over the place. I mean, those are little things that I like to do while you're doing your, internet search for crime, any infrastructure projects that are going on. I used to do all of that individually. Now I do use Claude. I really like AI. It's still in its infancy and it still makes errors, but it can be a good gopher, right? It can be a good gopher to go and get you most of the information. It will drop links, which is convenient. Then you can just click on the links. Hey, tell me what construction projects are going on in Beaumont, Texas. Tell me what the population is. Tell me what the average crime rates are. You can do all of that very quickly. Some of the other analysis in layer 2. So layer 1 can completely be done by AI, and it's going to give you all the links and you're going to have it all just at your fingertips. It's great. Layer 2, you can have some help with that, but that's going to take you, downloading the OM or some of the due diligence from the website, whatever it's on. Crexie is one of the only ones I've found that have their own little due diligence file. And you can kind of have AI like, hey, pick through this, and kind of tell me what you think about this. There's going to be a lot that it can't pick up on because it's not written on there, unless the agent has done a really thorough overview. And then layer 3, cap rate. So the underwriting, I can go over that next week. You can have AI help you with some of that, like, what's this, what's that? I won't spoil it. So I have my paperwork right here, but I don't want to get ahead of myself. So so that's analysis. I know it was short and sweet this week, but this will help you be able to just, yes, no parks really quickly. You don't want to underwrite every single park you look at. I did that for a while. It's not fun. It seems fun until you're on your 20th park and then it's really not fun on your 40th park. And by the time you're at 100, you're ready to shoot these deals very quickly, like shoot them in the head, get rid of them. I'm done with it. So now, that's why I kind of came up with this, like right away, I'm just looking at it from, layer 1 immediately. And I'm kind of picky. I'm like, if you don't pass layer 1, go to the trash, get out of here. So
Not only that, can I jump in? Not only
yeah,
that, but
please
when
do.
you are, if you're marketing and following the advice that I've been giving you guys in the last several weeks, then you're going to have deals starting to come to you. You don't want to leave people hanging who are putting in work to bring you deals. You want to let them know I'm either looking at it, I'm analyzing it, or no, a hard no, or this doesn't fit. Thank you. Here's my buy box. Send them back the buy box again. But communication is really important. Even if you can't get to it for a few days, you got 3 or other parks you're working on. It happens a lot to us. I'll get parks like, I'll have people send me parks, and then later, like 2 hours later, did you get a chance to take a look at this? And I'm just like, look, we're not going to get to take a look at it today, maybe not even tomorrow, but we'll take a look at it within the next few days. We've got 3 or 4 other parks ahead of this one. So being courteous, to especially if people are bringing you deals, wholesalers, bird dogs, or brokers. So make sure you're communicating. Those of you who are buying parks here with the bird dogs, the brokers, the sellers, whoever you're talking with. So it never hurts to and I know it gets tough, but if they're messaging you, at least just give them, hey, give them just a little bit of a heads up, even if you haven't looked at it yet. Don't just leave them hanging, because that's a good way to burn bridges, and you don't want to do that.
Yep. I love that. Okay. And that's it.
Okay,
Now
any
you have the
questions?
framework.
Questions, guys? Anybody want to hop on here? Anyone have questions? There's a question.
Is there a
Okay.
dollar per lot price that a quickie shortcut to analyze cost to lot ratio? No, not for me. Maybe for others, but I've never paid too much attention to cost per lot. I just think it's too much of a variable. It's different than like single family housing where you can like comp it to, 2 other houses on the street. So for me, no.
Anyone else? Anyone want to hop on here and ask a question? You have to have your camera on if you want to ask a question, unless you put it in the chat. But don't be that guy. Come on, get up here. Where are my bold folks at? Any other questions, guys? I mean, it's really not. Oh, this person's trying to come in again. Okay. Anyways, yeah, I like it how it was short and sweet, because I'm like super tired
I know.
after
I
that
know.
workout kicked my butt, and then
Yeah.
a super overdrive learning day. So, anyone
Hey,
else? Any questions?
I have
Yeah.
one quick question. Uh,
Yes.
if there is vacant land that can be expanded on, at what point do you start to evaluate whether, depending on where it's located, there can be some zoning restrictions? At what do you start looking at it in this initial phase, or does that come in the underwriting phase of looking at the park?
That's a great question. That's a great question. Mike, you're a builder,
Yeah.
so you have a quicker mental analysis on what something is going to cost than maybe some other people on this call. So my answer for you may be different than the answer I give somebody else who hasn't, done any sort of building. You're going to have a good idea. Okay, this is a $2 million park. It's already producing income. Do I have the opportunity while this park is doing its thing, because this is a business, to sink another 500,000 to 1 million to develop this, 10 acres.
Hmm.
And that is something that I would tell everybody, if you do decide to develop, you can underwrite it for 2 3 years out. You can definitely do that on the pro forma. I kind of am looking at that like you right out the gate, because I'm sure that that's how your mind works. I know you're extremely analytical, so you're looking at a park and you're like, oh, it has this 10 acres, I could do this and this. And I think that that's totally fine up front. I wouldn't do it at purchase. I would underwrite it possibly year 2 at the earliest, preferably year 3, depending on how well the park is running, because you really, want to make sure that that is good and stable and it's kind of, doing its own thing before you start digging into that extra land.
Yeah.
But yeah, I would give you a different answer than I gave, somebody who hasn't built.
Understood. Thanks. That's
Yeah,
helpful. Thank you.
yeah, you're welcome.
Yes, sir. All right. Let's see.
I have a question. I have a question.
Yeah, hey
Yes.
JD.
Yes. Last night I was in a meeting. I was talking about this RV park that I'm looking at,
Mhm.
and th- these guys were suggesting that maybe I give an offer of like 3 to 5 times the NOI, and I don't know. These guys, they do a lot of business, and they're some of these guys are part of the owners club.
Yeah.
And so I was like, oh, okay, all right, because I know a couple guys say buy it at a 9 cap.
Yeah.
You gotta you gotta really look at the books, look at the rent rolls and everything. So I was a little surprised, but I haven't bought an RV park. But these guys were saying, hey, give them an offer at 3 to 5 times the NOI. And I did mention that my friend bought an RV park at let's say 3 times their NOI, and he was like, "Nah, I don't think I'll be interested." So if I do go 3 to 5 times NOI, I don't think I have a shot. Um, I don't think I do. I mean, it could. We can talk. We can work something out creatively, but I don't know if y'all guys ever give an offer at 3 to 5 times your NOI,
That's an
or do y'all go 9 cap?
that's an interesting
Mm,
math
mhm.
way to do the math. I'd
Yeah.
probably have to play with that a couple of times to really, really get it down. Just hearing it is so off the wall. I haven't heard it explained like that before. That I'm still trying to like mess with it in my head. We're between 8 and 10 roughly. My offer comes in where it comes in. I don't really play
Okay.
with cap rates that much. We want to make at least 5,000 on each park, preferably 10, but that is harder to find, right? Because if anyone's been on Pace's Zooms, he wants $10,000 parks. They are more difficult. So we're happy at 5. And I'm gonna change my numbers until I get to where I'm happy with the cash flow, and I'm going to have really heavy
Mm.
reserves, and I'm going to have really, conservative growth and really conservative expense growth as well. So that I know I'm setting myself up for success, and the number, whatever cap it falls into, is the number that I'll submit,
Mm.
because it's where I know I feel comfortable with whatever debt structure I'm offering. The 3 to 5 time NOI is interesting, but
Maybe it's
I
just a kind
couldn't
of a
speak to
quick,
that. It
maybe
could
it's
be.
like the 1% rule type of thing, just a kind of a quick sniff test, if you will.
Yeah.
Napkin. I mean, it seems kind of, I don't
It
know.
does
It,
seem
it,
low. It does seem low right out the gate. And JD, I'll play with it. And maybe if you're on next week, I'd love to see you and kind of let you know like what I've found playing with a couple of the parks that I've analyzed based on that.
Mhm.
You never know what somebody's going to accept. I would say on
Yeah.
average, a homeowner is different than a park owner. Not always are
Mhm.
they savvy investors, but they are more likely to be a savvy investor. They've ran this,
Mhm.
they've purchased it, sold parks before. You're going to get a whole different mix. But if you come in with a really low ball offer, they're probably going to disqualify you pretty quickly. It could happen, but once again, it's like a needle in the haystack. Are you going to find somebody who's like, sure, I
Yeah.
listed my park for 3 million, but I'll give it to you for, 1.2?
James actually had a good point. He says that's more for business purchases, right? 2 to 3
That's
x.
what I was about to say. That's how you
Yeah.
do valuations on businesses. That
Yeah.
Wesley,
depends.
what's
Exactly.
up,
De-
Wesley?
hey,
Yeah.
what's going on, Jess? Depends on what industry it's in. Different types of businesses in different areas trade for different multiples. Some of them
Yeah,
may
Mhm.
sell for 2 to 3x. Some of them may be at 5x.
yeah.
But that's more of a business valuation than a real
And that
estate.
makes sense.
Yeah.
An RV park is a business, but it comes with real estate, and not every business does come with real
Right.
estate. So there's a different
Yeah.
factor in there.
There's definitely a business involved in it, but it's also, I don't know.
Yeah,
It's a mix. It's like a hybrid
yeah.
business. But
JD, I appreciate you
I don't
bringing
know.
that up. That was cool, though. It's
Yeah.
it's always fun to learn something new,
Yeah. Right. I mean,
whether I use it
you
or
kind
not,
of,
but it's interesting.
yeah. Well, 3 to 5 times, that's a huge difference also, right? You know what I
Yeah,
mean?
Yeah.
So it makes me a little uneasy. 3 times would make sense. 5 times. I mean, if we're
Yeah,
our current park we're on is a $3 million purchase price, and it's a 500K NOI. So, do the math.
Different industries just trade at different multiples. It depends on whether
Yeah.
it's a service entry, HVAC or plumbing company, that's why like tech stocks, tech companies used to trade at 10x plus multiples, sometimes 25 at like, crazy multiples.
Yeah.
But these days, most, the silver tsunami, most older people retiring, so, they're generally selling for like a 3x multiple.
Makes sense. That's good, man. I love it. Insight on that.
But thanks
See.
for giving me some feedback, because now I'm now like I'm a little confused because I was getting something from some other guys, and then last night I was really shocked when they told me that. But hey, I'll just I guess I'll keep it in the back of my mind.
Yeah, it sounds.
Yeah.
I mean, I don't want to say an experience, but it does. It's not something that we've heard in this
Mhm.
space, or that we've used, or that I've never heard anyone else I know in the space that uses that kind of a calculation. It seems kind of risky to me.
Yeah.
Very vague. I mean, there's just a lot more that you need to look at than just that, I think, in my opinion.
Mhm.
Guys, that's great. Yeah, great question. I want to take a quick minute to let everyone here know that we are doing some very tight knit coaching, right, on RV parks. If you want to be part of our very tight knit group, we've got 7 right now. I think we're going to stick with this 7 for the next few weeks, but we're going to be enrolling and getting on discovery calls with anyone here who is serious about buying RV parks. There is some criteria that we would ask, because we want everyone that we work with to be successful. So we want to know that you have had at least 3 or so deals under your belt in real estate, or that you've got some kind of experience, or a partner that has experience. So I wanted to just let you know, if you're interested in that, to see what that would look like. We have a couple of our students here on the call. We're getting progress. We're sending on LOIs. We're getting on live seller calls, within the first few weeks of it. It's an 8-week program, 1 hour a week. And then you have full access to my wife and I. We basically walk you through. It's a blueprint of RV park buying and operations. So if anyone's interested in that, let me know. I will drop my link in the chat. I'm taking calls next week, so it'll be probably mid-May for this next one to roll out. So if anyone's interested, let me know, and you can just hop on my calendar.
Yeah.
On my calendar link. So
Because he's in Canada till
here it is.
Saturday, so I'm holding
I'm
it
in
down.
Canada, eh? Yeah. These guys
But-
are great. These Canucks are fun. They're all very kind. I had a guy at the bar. I'm gonna just throw a quick story in there because I like stories.
Totally fine.
I went to the bar across the street because literally here I had an old fashioned the first day I got here, $22 freaking dollars at the hotel bar. About crap my pants. I was like, holy crap. Anyway, so I went across the street last night and got to talk to some locals. The waitress, bartender, or the bartender lady, and then the guy next to me was locals, right? Obviously, and so we got to talking, and he wasn't too happy about the tariffs because we talked about. I asked if they had any good bourbon, and most of the bourbon comes from America, so they've taken a lot of it out of the bars and the stores here. And he made a comment, and he's like, yeah, he kind of mentioned that, and I go, yeah, whatever, right? And we had a conversation about it, which I won't get into, but they had Jack Daniels, and he bought me, and the other guy was an American from out of town next to me, bought us each a shot of Jack Daniels just to show his love for America and Americans. It was a freaking awesome gesture. I thought it was really dope. I wanted to share it with you guys. That's the type of people. They remind me of Texans, right? The Southern guys. Wes is one of them. He's a Louisiana boy. The South has the most hospitable, some of the kindest, most generous people I've ever met in my life, and so the Canadians are have a very similar vibe, kind of very humble. So, Tammy, you're in Toronto. Holy smokes, that's crazy.
You should go see Lance while he's up there.
That's
He's in
why I
North
was
York.
asking you where you were.
He's in North York.
Oh,
Yeah, I'm
okay.
in Scarborough.
I don't know where that is. I
Yeah, I'll
just
be
booked his
here.
hotel. That's the only
I'm
reason I
leaving.
know.
It's part of Toronto.
Okay.
Nice.
Toronto's just really big, so that's why it's
Yeah.
called the GTA. So there's all these different boroughs and areas. So I'm like the east. I'm like southeast Toronto.
It's called GTA. That's cool.
Right, GTA. Yeah.
It's a fun acronym.
Calgary. Oh,
Awesome.
Calgary, Brad. Nice. What's up, dude? That's cool. Oh, very cool. What a trip. Small world.
Yep.
Yeah,
Yeah.
man, it's awesome here.
Oh, where are you? There you are.
Yeah. Hey, Brad. What's up, brother? Good to see you, man.
Yeah, good to see you guys. This is awesome
That's
what you guys are doing every week.
Hey, thanks, man. I appreciate it. It's funny. It's playoffs and hockey playoff season, and I was talking to my buddy who's Machu. Where's Machu from, honey? Do you remember? He's like
Close to
kind of
France.
in the French region, whatever. Not
Mhm.
France, but I said, oh man, we were watching ice hockey last night, and he goes, oh man, hey, it's hockey. It's just hockey, brother. He's like, he don't say ice hockey here. They don't like that. I was like, oh, okay, got it.
No,
But I thought it was
no,
funny. Yeah, it's just
no
hockey. So
playoffs for the Flames though. So
yeah,
yeah, it's all good.
very cool. All right. Anyone
Awesome.
else
Thank
have
you
any
guys for what you
questions?
do.
Oh,
Appreciate it.
yeah. Appreciate
Thank
you, bro.
you.
Yeah, so guys, my calendar link is in there. If you want to hop on a discovery call, no strings attached. If it makes sense, it makes sense. If it doesn't, it doesn't. Other
Hey
than that, I think
Lance,
we're good. Yes, sir.
the third Zero to Hero thing is going to be in Calgary in October 5th.
Oh, no kidding.
Yeah,
Oh, wow.
the one in the co-living one is in San Antonio in a couple of weeks,
Mhm.
and then the RV parks and mobile home parks is in California. And
Nice.
then October 5th is the wholesaling one's going to be in Calgary, and then the last one's in Florida.
That's
Wow.
wild. I wonder why Calgary. That's interesting.
I don't know. He had said he was either going to do it in Canada or Mexico, and now they've landed on Calgary.
Okay. Right on. Well, thanks for the info, man.
You bet.
All right, guys. Anything else? I think we're good, huh? I'm gonna
Awesome.
sign off.
Yep.
All
Thanks,
right.
everybody.
Thanks,
We
Andy. You're
appreciated
awesome.
having you here. I will upload this to the drive if anyone needs access. Just email us rvpark@info.com. No, sorry, rvpark@texasbnh.com. I'm tired.
Yeah. Okay, guys.
Or reach out
Take
to
care. Have a
Lance.
good night.